Ladies and gentlemen, welcome to Real-Time Daily Trading Ideas, our daily webinar series. Today it is Friday the 15th of March 2019 and it is the last day of the trading week, but we want to look at the markets, want to show you all the trading ideas that are available to you with our professional trader. Before we begin, please have a look at our risk disclaimer. You are trading with leveraged products when trading Forex and CFD. You should always be aware of the risks in trading those leveraged products because the leverage effect can work for and of course also against you. Our professional trader will show you some trading ideas. Please don't take them as trading advice. It's only for informational purposes. All trading decisions will be made on your or by yourself and on your responsibility. Since it is Friday, it's Dirk's turn from Germany. Dirk, if you want to, we can start right away. I will give you the screen and the monitor, and then and the microphone, and then let's start.
Yes. Good morning. A new voice, or let's say an old voice, familiar voice. Hi there. Greets to Berlin, and of course, greets to you guys out there. Hopefully, everybody can hear me and see my screen. If so, just give me a little bit of a feedback, and we would start into the session today.
Yes, it works fine, Dirk.
Okay, perfect. Yeah, besides that crazy stuff, what happened in New Zealand, you see all these pictures of shootings there. Of course, we got to take that economic news for important information for trading ideas on top of that. Besides the technicals, we always have a look at the fundamentals and, of course, at the sentiment. As you know, that's my style. We will start with a little bit of let's say a cheerleading stuff. It's the Canadian dollar, the loonie, which we presented last week at Friday, and as you can see, the red arrows mark the so-called direction of the market. And however, if you really took that one around here, the 134. 134.30s and 50s, and you see the blue trading box right here, then you got to be making something like 100 pips, so-called big figure, to the downside already. And if you're taking that out, you're going to be happy at the happy Friday today, and a new perfect start into the weekend with a lot of drinks to share, right? Okay. Besides that, of course, we will have a look at a couple of markets. First of all, we will start with the German DAX. As you can see, and we'll just close that window here just for having a little bit more space. You see that chart from the last week, and these black lines already marked the so-called levels where we anticipate the DAX to be possibly trading around those levels because of today's market event. What am I talking about? It's it's a market event. It's called quadruple witching day. If you have any doubts that you don't know anything about this stuff, then of course it is very, let's say, difficult to read in that stuff in a couple of minutes or in just one day and to get all the stuff around that. But quadruple witching, just for information, is nothing more like expiry day. There's a huge expiry day every third Friday, every third month. So we gotta have 4 quadruple witching days in the year. That's the first one in 2019 right now. And what is expiring is we have index options, we have index futures, we have stock options, and we have stock futures, so-called single stock futures, SSFs, as you call them. And you see all these papers and all these numbers at the Eurex website. And you can imagine that it is quite interesting and quite important for, let's say, a huge index like the DAX. And the DAX is one of the biggest indices in Europe. talking about weight or capitalization and liquidity. And so it is very interesting to see where are the barriers or where are the so-called levels of interest. And this is the blue trading box. It's still important between the 11,650s and the 11,700 marker. So if you look at let's so-called options and futures heat map, you see a big level between the 11,620s, 11,650s, and 11,700s. So this is the level to be right here. And it could be interesting to see that after or in direction to 13 CT, that's the time where index options and futures are expiring. You got to see if it is interesting for you to find a setup with a little bit more room to the upside, because it's possible that there's something like a huge short squeeze coming up, so that you are not killing yourself with a small stop loss stuff like 10 or 20 points. So it's got to be protected against a short squeeze. That means sometimes between 50 and 100 points. If you may scratch your head right now, because I'm talking about 50 and 100 points, well, it's all about the position size, and it's all about the level. So you can calculate it yourself, or even by using the tools Admiral Markets here gives you. Talking about levels to the upside, we see that 161.8 level still here. So that's around that 11,612, 11,712, 11,713 level. And of course, if you see projections to the upside, still a way to go. To the downside, I'm just taking that black line right here, moving it to the 61.8 level, which could be a nice target to the downside for the bears. Okay, just looking about showing you possible targets, not for only an intraday trade, so something like a swing trade for a couple of days to come. Looking at the Xetra DAX board, we will see resistances today at 11,635, 11,683. And as you can see, a pivot point 11,588, and supports 11,540 and 11,493. Regarding the exponential moving averages, we see that at 11,684, and important to say, still around that area. We are still hovering around that area. The EMA 200, so exponential moving average 200, is at 11,652. This kind of data is just taken from 10:30 CT today. Regarding the fact on daily basis, EMAs don't change too much here. So 11,650s, 11,652 is quite well. Looking at some technicals only from the Xetra DAX, there is still an old gap open. This one is open between 12,103.55 and 11,938.80. So it's still open. Long way to go from the current level. But you never know what is going to happen with all these kind of policies, politics, and surprises out of politics, talking about macroeconomic events like Brexit or the US-China trade deal, which is obviously not coming around the corner in the next days or even in the next weeks. That is the next point. Looking at the euro-US dollar and looking at a couple, don't be confused with all these lines, we'll later on explain them. If we look at the current economic status and at the two macroeconomic events, which are almost guiding and steering the market in the last weeks and even month, and this will be something like taken for longer in the future, because everything you read and everything you might interpret is that Mr. Trump and Mr. Xi are not about to meet in March and not about to meet in very early 1 or 2 weeks. No, their so-called meeting got postponed day by day, and now they are even talking about possibility of a meeting in direction of end of April. So that takes a little bit longer. If you ask me, just my opinion, the longer it takes, the more obviously it is that there's something like a bigger problem, because if there is no problem, they could be having a meeting and of course signing something and selling that outside to us trader boys. That is the new contract, that is a new trade contract, and everything is fine. it's the other way around. So obviously it's not working, and I won't be surprised if that whole trade deal story is falling apart in a couple of weeks. Okay, another one is, as you always read about, that is the Brexit stuff. You may not want to hear about Brexit anymore, but it's still in the news, it's still in the tickers, and it will be longer if the Brits are happy to get a new date. So the current date is still, everybody is reading about 30th of June, but the current date is still 29th of March, and that's just 2 weeks to go. So no deal Brexit is still in the house, and that means the only thing what is going to happen next Thursday and next Friday, there's the European Union summit in Brussels. So 27 countries are about to decide if they get the date of the 30th of June, if they get that Brexit stuff postponed to the 30th of June. If not, if they are not willing to do so, and 27 countries, I would admit, 27 countries have more to say than just one country, I would say. Then it will be getting roughly in direction to a no-deal Brexit and to whatever the hell is going to happen with a cable or with markets. You never know. Okay, this will be the next we will discuss. Euro US dollar on top of that is a little bit impressed with the happenings around cable and around the Brexit as well. Opening a buy here at the level of 113.17 today. Still, stop loss is very underneath in the direction 112.60s, 112.65, as you can see the red line here. And going to more details, going into the 1 hour chart just to show that levels. There is a 61.8 level, which is very close to that 113 handle. And it's quite funny to see not only the technicals from that Fibonacci retracements, for example, on top of that, even numbers from options, and on top of that, from sentiment data, other sentiment data shows you that 113, that psychological 113 handle, is very important today, because there are billions of dollars in options expiring today at New York time, and this 113 handle is very important to obey. Interesting to see that there are a couple of options up the road in direction to 113.70s and 114. So it is a trade with that, and on top with a little bit of relief for the euro, because the current economic data, so I'm talking about the last days, they weren't too bad. So a little bit too negative territories in the last days might be doing the other way around and giving us a little bit of relief to the upside. So that's the only thing. Try to catch that little move to the upside and moving that stop loss as fast as possible in direction 11:30s or 12 o'clock today, in direction to the entry, if we get something like a room of 15 to 25 pips to the upside. If not, that the stop loss will remain in place. If we just fall sub that 61.8 level here, which is at 113 with 112.98, we will have a look if that level of the last lows from the hourly chart here are going to be falling apart and breaking down. So that is the way to just stop the trade and exit. Manually, you can do that, of course, on top, besides stop losses and other trading instruments you can use, tools you can use. Next thing is Euro GBP. Opening a trade sell order at 0.8542. And as you can see, that one here already tanking, going into the right direction. And with a target of that 38.2 Fibonacci retracement, you can see right here. We are on a monthly chart. It's a long-term analysis going into the weekly and looking for that so-called Fibonacci clusters. They are around 0.8420s and slightly sub that 84 handle. And looking at the daily chart, just widening the picture a little bit. checking out the last lows from the daily perspectives. I'm just using that one here, and we'll be manually taking that down later on because I scratched that sell line here. Okay, and as you can see, that 161.8 is already being tested, and that would be a next in. I'm just using, and it's not a black line. We'll add another one. I'm just using that horizontal line just to mark that 161.8, which is at 84.80s, where you could, where you should have your heads up and look at that level, if that level is be confirmed, or if that level is a support where the Euro GBP is going back up again. So possibly, if you're not too greedy, you should take profit and direction at 84.80s here, possibly target for that trade today. Nevertheless, I have to admit, I have to say that Euro GBP or the cable, like the GBP versus the US dollar, or every kind of currency pair with the British pound right now is something like playing with fire. Of course, you never know what is happening in the next, let's say minutes or hours to come. Someone very important from the British politics is using a microphone, telling us something, and it could lead to a heavy bump to the wrong direction for us. So just shouting out something like a warning, and of course you should pay attention in the next weeks to come. It could be getting more than just bumpy, and if you never know what happens with liquidity. If it is really going down, that moves are getting heavier. The less liquidity you have, the heavier the bounces could be. Just saying. Nevertheless, we are still talking about cable, or we should talk about cable. That's a long-term chart. A nice example about what is going on with the Forex market. We just take that long-term chart, draw that long-term Fibonacci lines, and just have a look at the current status of that 23.6, where we are getting very, very close. Obviously, something like that 135.50 zone is something the market likes to test, and then maybe possibly falling back down again. So that would be another conclusion, getting that old levels in direction 131, in direction 130.50. So that is a possible target. I'm still looking on the monthly chart and just want to show you something typically about the Forex market. If you see that crash here, the pound crash, you see that low at 111.23 here at middle markets. You could possibly see if you just compare that. You could see something like 113, 112.50, 114.50, or something like even 113.45. So the Forex market is nothing like a central stock exchange. The liquidity somewhere is maybe interrupted, and different kind of lows could occur. So one example, I just had a look on that long-term cable chart today. And that one was 114.50 and 114.37 at the same day. And you see 111.23 here. So that is something you can, on top of that, have a look at the Euro Swiss franc when we saw that Swiss franc crash a couple of years ago. Same thing. Just a warning, something like this, that there's always an event in direction happening like this. Next thing, looking at at the weekly, forgot that. I'm widening that picture a little bit and taking that Fibonacci's as well from the last high here to that last low. I'm changing the color so that you guys don't get too confused with that the lines. Okay. By the way, sorry for that interrupting noise. Telephone. Okay. Then you got to see that there is a level. Why is that black line not moving? Okay, that there is a level of 61.8 at direction 136.33, and that there is another level around here, 23.6, which is in direction very close to that round level of 129. We will leave that and going to the daily, looking at the current levels and looking at the last high and the last low here, taking that one with another color as well, so that we have at the end that we have simply 3 colors, nothing like interrupting, nothing like confusing with the same color. And where we can see and possibly have some targets to the downside here as well, taking that so-called shape, like I always do that, printing something like a target zone for possible next days to come. And that could be around that 38.2 level, where we have a target to the downside. And the so-called cluster zone, which is at the 134, 135 level around here. So market is going up first, then you got a possibility of shorting that room here, that shape, that blue one right here, and doing that with, like always, doing using that so-called arrows. Where's the arrow down? And would say that we have a possibility of getting back down to these old levels here. Where's the arrow again? There it is. So that means that we will have a target in direction to that 38.2 level from the daily perspective. Just regarding the fact what will be happening in the next days to come, and especially looking in direction next Thursday and Friday, where the European summit is taking place, and it won't be surprised. I won't be surprised if it takes them longer let's say to inform everybody, or to let's say to interview everybody, and to get opinions of every of those 27 leaders from the European Union. It's just not one guy. It's on top of that like a mess. Okay. What is going on with a couple of other markets? There's still one to go. Don't want to forget it. Where it is, I didn't open that one. Okay. We will have a look at oil. WTI. Didn't open that one. I thought I did. Okay. Just doing that on a daily perspective as well. Closing that one here. And have a look at the longer term movement. Doing the same here first with longer term Fibonacci's from the daily perspective, and we'll be having a look what is going to happen from the next technical steps from that dailies. Looking at these 50, so if you're going into Fibonacci analysis, and if you're looking at definitions and looking at explanations how Fibonacci retracements work, then you will find out that the 50% Fibonacci does not really exist. It's just a trading stuff that is 50% of the movement from there to the low. So it's just on top of that some chart technical stuff. Something which is from the Fibonacci explanation and definition much more relevant is the 61.8 level. So this is very close to that, let's say $64 handle. Everybody is talking about lower oil prices. Mr. Trump is talking about lower oil prices and talks to the OPEC, speaks to the OPEC and speaks to Saudi Arabia and speaks to a couple of other countries. But on the other side, he's doing something contradictory. He's doing something like telling Iran, no, you're not going to be exporting in the next month. You're not going to be exporting. You get sanctions. And he's talking about with Venezuela, you're not going to export. You're not going to sell your oil to our ports. And so he's doing the other way around. And on top of that, all these kind of U.S. fracking companies are making a good amount of money, because the higher the oil price goes, the more they benefit from it. So it's something like a big lie, like all these stories around the markets are. And if you look at possibilities from the oil price perspective, prognosis forecast, it might be getting interested that the oil price is still in place to get a bump to the upside. Why? That Venezuela story is getting crazy. And when you read the news and then you read something about, let's say that catastrophe taking place right now, that electricity systems are falling apart and the whole country is running on low electricity or sometimes without any electricity, then you could imagine that this has effect on production levels and the production of oil. And if the Venezuela boys are not selling it to the US, they might be selling it to another place. And somewhere the oil is missing. They won't be producing too much in the next weeks to come. So that will have an effect. And right now, the Saudis and a couple of OPEC boys are not willing to produce more to keep on track with their production cuts. And it might be getting interesting. The less oil is available, the higher the price goes. So it possibly is very interesting that we see a bump to the upside in direction of that 61 technical. Of course, have a look at expiries as well. Have a look at the rolling of the futures in the next month ahead. You will have possibilities to check that out at the NYMEX, and that one belongs to the CME group. Okay, I spoke about a couple of markets. Are still some questions possibly, or to something like a special market, or is the time is our limit always?
Yeah, actually we are already at the end of the time, I guess. So maybe your final words for the last trading day of this week, and then I will take over once again to end the webinar.
All right. Okay. Again, a warning. Going to that market watch back again. And checking out the levels we were talking about. First of all, that Euro-US dollar is still in the green. We spoke about that Euro-US dollar buy here. We spoke of a Euro GBP short. That one is still in the green. It took a short at 85.40s. And we spoke about the cable where we didn't place anything like a trade right now. Last thing I forgot. This morning, I started a short at the US dollar versus Japanese yen at 111.65. Still very close to that entry. Stop loss scenario should be something like 112.15 to 112.35. Let's see if that target is going to be hit. Target is 111.90s, 111.70s. Excuse me, not 110. Sorry. Okay, that's it. Hopefully you guys have a nice trading day, a couple of pips running into your pockets, and of course, wish you all a happy weekend and kind of a relaxing time. And if you like, we will hear us next Friday, 11 CT, same place. Thank you very much.
Okay, thank you very much, Dirk, for your analysis and insights into the markets. Dear traders, of course, we also want to wish you a successful trading day, last trading day of the week, and also a nice weekend. If you have any questions regarding Admiral Markets or MetaTrader trading, simply contact your local customer support team. You can go on your local Admiral Markets page and find all the contact data there, and we will be glad to help you out in your native language. All right, so have a nice weekend. Dirk, you too, of course. Thank you very much to all of you, and bye-bye.
You too. Bye-bye.